Hey traders, Raghee here, and in this video we're going to go ahead and take a look at a few daily time frames: gold, silver, crude, and bonds. We actually might take a look at the euro as well. So let's see what we've got going on, starting off with actually crude, since we're here. I see that there's continuing consolidation in crude, a narrow volume profile. I'll be looking for a potential breakout to the upside in crude, so I'm going to remain bullish, respecting the trend that was, waiting for some higher than normal, some volume confirmed breakouts, preferably through the value area high, just beyond 4160, and a breakout in crude. In the bond market, so when you take a look at bonds are sitting at the bottom of their range. That's the value area low for the month of October. We've been down at this low before, so you've got a volume derived low and a price derived low. And I'm feeling confident that as long as we maintain some support above about the 0.77, although we have dipped clearly below that in terms of standard deviation on the V-score, more generally remaining above the mean, I'm fine with looking long bonds. But where we are right now is in the middle of chop. And being in the middle of chop basically means that we don't have an edge. So keep that in mind. So what that means is until we get down to about 173.20, until we get down closer to these previous lows and the volume profile value area low, I don't have an edge. And that'd be a great time to look at something like the ready, aim, fire for an oversold buy. All right, so moving on to gold. Gold is going to be a market also that I'm generally speaking bullish in. Now, we've been talking about gold for a number of sessions, and we finally did take out the 1917, in other words, a high we saw from that minor low that I was talking about is 1917 and a half. I think we printed 1918 and change. So you might ask, would that pull us in long? Well, yes, it could. The whole idea was to look at the long side and manage that with a shorter term time frame to get the nuance of the long. But I'll stick with the fact that as long as you stay above the +1 standard deviation of the V-score, I think we're going to continue to see a little bit more upside follow through. But just how much? Look, if we can get to about 1929, if we can get to about the open of this candle here, which was 1927, that would be a pretty good level for an initial profit target. And then we'll see if this market's capable of breaking above these near-term highs and the value area high for the month of October. Now, silver is a market that I've been warning traders about. And I warn them because when silver gets very, very strong, usually once it bounces off a historical, usually on a monthly or weekly chart historical low, it'll take off. We did that back in March of this year. And then it's going to get everyone's attention, and then it's just really going to be a heartbreaker. We're just in heartbreak mode on silver. I'm not a big fan of trading silver. I seldom do. If I'm going to trade metals, it's going to be copper or it's going to be gold. It's going to be a play on an economic optimism and a certain sensitivity to the equities market, that's copper, or it's going to be a play on real yields, that's gold. Silver doesn't do either well. I don't mind silver, and if we are going to see anything in silver, it's probably going to be a consolidation break, but it's going to probably move in sympathy with gold. So gold's going to need to move higher, and with that high tide, it'll probably take silver with it. I wouldn't short silver. I'm just not as keen on trading it and being long. But if I'm bullish gold in its formation, I can easily be bullish silver in its formation, also with a value area high overhead, and not just any value area high, not just the month of October, but the year's value area high. And that's going to be a level through which, if we can get a breach higher with above average volume, that would be a great place to look for a trade to the upside. All right, finally, let's take a look at the euro. Now, the euro is the best way to take a look at, of course, the euro, but also the dollar. And a lot of folks are asking me, what's next for the dollar? Well, with the euro sitting on the value area low for the month of October, which is also coinciding with the value area high for the year, this is not exactly an oversold chart of the 6E of Euro US, that's going to happen closer to, say, 1650. But this is mostly a market that, based on the previous trend, I'm looking for more continuation to the upside, but it's in chop now. So let's remember that. This isn't the uptrend we saw through June. So would I rather a test of about 1650, 1635 before I get long? Yes, because that's going to allow me a more exhaustive, oversold buy and a tighter stop. Remember, our risk is the distance from our entry to our stop, so that we could actually build this as a really low risk, long euro, short dollar play. I'll see you in the next update.